Good morning, Bookmap community. Happy Monday. Today's March 18th. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how it moves through the two-way auction process. All right, well, last week was a doozy on the ES. Essentially, the market was trying to move higher, but at the same time, it was trying to balance off the transition between one contract to another. So there was a lot of kind of mixed signals bouncing around in the market. But the overnight this weekend gave us some clarity. Okay, so the question that we had last week at the end of the week was, let me zoom out and look at the daily. Was this going to become a bigger pullback where the market had to, retrace the last few weeks, maybe even the last few months worth of momentum, or were we just balancing off at higher prices, right? We've had tons and tons of momentum to the upside. So the question at the end of the week last week was, is that momentum over? Do we need to pull back down? Or are we just going sideways at higher prices to spend enough time to continue that momentum higher? Okay, the way the overnight inventory traded increases the odds of sideways. But let's start this morning by zooming out and taking a look at the monthly chart to give us some perspective. This is what Jim Dalton calls the top-down approach. By zooming out and starting looking at the monthly chart, it gives us context to carry forward. Okay, so first and foremost, on the monthly chart, we are still one time framing higher. What that basically means is that the market is just still making higher highs and higher lows every month. And as long as it continues to one time frame higher on the monthly time frame, it can keep going higher on the monthly time frame. It seems overly simplistic, but it really does help you to feel more confident on a weekly or a daily or even an intraday time frame to understand that there is momentum on a longer time frame. That momentum hasn't run out, right? Now, at whatever point, and it doesn't look like it's going to be this month, but at whatever point the monthly makes a new low, a lower low, well, then everything changes. Then we want to flip our perspective. But for now, we've still got momentum on the monthly. Bullish to see. So let's zoom in and take a look at the weekly. So same thing. We can see here on the weekly, a lot of momentum. This thing is just moving in a very tight channel, straight up and to the right. Okay, week after week after week, the momentum continues. But last week was an inside week. Okay, again, it's a little bit tricky here because of rollovers. It depends which contract you were looking at which day and so on and so forth. But we'll just call that an inside week. Okay, we also note that the candle looks a little different than the previous weeks, right? These candles looked much more bullish, moving from lower prices higher. Last week's was moving from higher prices lower. So does that mean the momentum is over? Of course not. But it might mean we need some balance. So we had right here all these weeks, week after week after week of momentum to the upside. We got a candle showing balance. We then spent basically another week and a half going sideways before we began the next round of momentum. So that is certainly a possibility here this week, is that we might be just going sideways, balancing off all of this momentum that we've had over the last few weeks. Okay. This also tells us that if this week's candle can get above last week's, the momentum continues. New all-time highs likely to bring more short covering and more buying at the highs. All right, and then we will zoom in and take a look at the daily chart. So again, the daily chart, it really all depends how your software, figured out the rollover, if you're trading the ES or the NQ. So for the sake of what I'm seeing here on the chart, essentially what this is to me is both a channel, as you can see drawn here with the blue lines on the daily time frame. If you don't trust the channel from the ES because of the contract rollover, you could just look at the SPX. The channel is there as well. We closed at the end of the day on Friday below that channel, which is, of course, very bearish to see. But as soon as the market opens, guess where we're going to open because of this overnight inventory? Right back up in that channel. making that a look below that fails, increasing the odds of momentum higher. Okay. We can also look at last week as the beginning of sort of a balance area. The market is creating a range where it is going sideways, spending time, okay, in order to decide which way it wants to go next. Sometimes the market will just go sideways for weeks before it breaks one way or another. If that is the case, then when we zoom in and we take a look at the market profile chart, we can see a balance area low would be something around Friday's lows. Okay, so the market making those lows, coming back up, and then getting this continuation higher over the weekend is a sign we are moving to the opposite end of balance, which is going to be somewhere around 52.50. Okay, going to be somewhere around these weak references that we have above. So that increases the odds that this week we are heading up to repair the weak references at 52.43 and the weak reference at 52.46, meaning the market should pass through those levels. Now, where does it get tricky? Tricky, because of the gap, right? So this morning, the market will be opening with a very large gap to the upside. Large gaps often don't fill on the first day, but that will still be the first priority for the market. So there will be sellers that are trying to take the market lower just to get to Friday's high. And so one of two things has to happen. Either those sellers get squeezed, they try to take the market lower, it finds support, it comes back through the overnight high, and they all get squeezed, and then the market works its way higher, or we just spend the day going sideways. So until they, finally give up on that gap fill trade. Of course, option number 3 would be they get the gap fill, the market pulls down to yesterday's high, and then we look to see what happens there, right? Do we find support at Friday's high and turn around and head higher, or do we pull back down into Friday's range? So any scenario with a gap up where they do not fill the gap, or they fill the gap and immediately find support, that is what we call a gap and go. It just means the overnight created momentum and the regular trading hours is confirming that momentum. If that happens today, if we get a gap and go, the highest probability is that we are heading up towards 52.43. Okay. If the market pulls back down into yesterday's range, it pulls back down below 52.02 and it starts to spend time down there, and it starts to bring volume in down there, well, that's bearish for a larger pullback, okay? So the first order of business for us this morning will be to monitor the gap. Do they fill the gap, or do we get a gap and go? Very nice. I like very much. It is worth noting the market is opening above some previous support here. We got this large cumulative node around 52.18. You can see we spent a lot of time, brought in a lot of volume last week in this area. So that could be a great place for the market to find support and turn around and head higher on a gap and go this morning. So I will be keeping a very close eye on this area around 52, we'll call it 52.12, really anywhere between 52.10 and 52.12 as potential support for the market to get a gap and go. If not, it'll be Friday's high at 52.02. If the market opens and immediately pushes higher, then we watch the overnight high at 52.27 for support. Other than that, we got to wait and see what happens. Any questions on the ES this morning? Good morning to the demo trader. Appreciate you. Will is here. David G in the house, and Cool Beans. Looks like we got 53 people hanging out, but only 15 likes. So what, you all hate me? You all don't like me? Please smash that thumbs up button. I sure would appreciate it. Get those likes going first thing in the morning. That tells the algorithm, the all-powerful Google algorithm, to send more people our way. Good morning to Tony. Welcome. All right, let's jump over and take a look at the NQ. Okay, we will start zoomed out once again on the monthly. It'll pretty much look exactly the same as the ES, but it's worth just taking a quick look. Yeah, same story. Momentum on the monthly. The candle doesn't look quite as strong. This month's candle doesn't look quite as strong as the ES, but it is still momentum on the monthly, higher highs and higher lows. So let's zoom in and take a look at the weekly. The weekly, the market has already clearly rolled over. So if you remember when we looked at the ES on the weekly, we said this candle here might mean we need to spend a few weeks going sideways. Well, the NQ has been doing that. It got a similar candle and it's been going sideways the last few weeks. So this is a form of balance on the weekly time frame. That's very important to make note of, okay? The balance area high will be around 18,500 and the balance area low around, we'll just call it 1,800. So that 500 point range is a very important range. When we start to get up to the upper end of it, does it run out of steam and come back down again? As we get to the lower end, does it pick up momentum and come back up again? And which side breaks? Whichever side breaks is likely to get continuation. If the market's been going sideways and they break higher, they're likely to get momentum higher. If they go sideways and they can't break higher and they break lower, you're likely to get a larger pullback. So it will be very important to watch this balance area on the weekly here for the NQ. Let's zoom in and take a look at the daily. Yeah, so the daily is just a mess because it's been in balance. It's just very, very tight range. So exactly the same as the ES. We have a, actually, do we have a gap? Yes, we do have a gap up from Friday's high. Friday's high on the NQ was 18,176. So that is the gap fill level. Same story as the ES. They are either going to try to fill the gap and fail and pick up momentum right away, or fill the gap, find support at Friday's high, and then turn around and head higher. Or if they get down into Friday's range and they start to spend time and bring in volume, that is bearish for a larger pullback. Okay? So getting the gap and go would be bullish for continuation up towards 18,400 here today. So both markets in the same position. Got a big old gap. Big old gaps likely don't fill the first day. So let's see what happens. Cool Beans says, smash the button or walk the plank. Arr. Debbie B in the house. Good to see you. Jay is here. Bust a move. Good morning to you. So any questions from the chat? That's it. We got 15 minutes, folks, till the market opens. And I've just told you everything I've got to work with. So any questions from the chat? Good morning, Chintan. Could be questions about the market. Could be questions about the auction process. Could be questions about market profile or Bookmap. Anything you want. Good morning, Ships. Welcome. Chintan says, I'd be looking for a fade the market via selling out of the money call options on SPX. Better be way out of the money, brother. That's the thing about balance, right? So again, we're just going for a purely hypothetical here, right? Because I don't know. The market hasn't opened yet. But let's say this morning the market opens. It pulls down a little bit. It turns around. It gets back above that overnight high. It comes down. It turns that overnight high into support. It can very quickly head up to repair these weak references. Okay? So then it's just kissing that all-time high once again. All it would take at that point, and maybe not today, but maybe tomorrow or the next day, all it would take is just one little poke. Boop, boop. Back up into those all-time highs, and then you get a lot of short covering. Right? You get everyone who's been selling. They were selling on Wednesday. They were selling on Thursday. They were selling on Friday. You start to squeeze all those sellers if you get back up there above 55. So, if I was selling calls up there, I'd be very, very nervous because that short covering could make a big move. So just food for thought. Not telling you you're wrong. I have no idea. Now, if you're talking about 0 days, if you're talking about a trade that you're going to get in and get out of today, well, then go for it. There is a likely probability they will at least try to fill the gap. And then you never know. That could lead to more selling. But if you're thinking bigger picture, caution. This thing could always make new highs. Cool Bean says, BTC analysis, please. Yeah. Let's take a look at the corn. Bitcoin. Okay, so the momentum has flipped on the Bitcoin. The market rolled over and it started to pull back. Yesterday, it had a bounce. Now, that doesn't necessarily mean anything bullish as of right now, because this could just become a channel to the downside. Right? For all we know. But I would say the more time and the more volume that the corn brings in today above yesterday's high, so the more time and volume it can bring in above 68,900, the more bullish it'll become to head back up for all-time highs. Okay? So that's the question. We got the pullback. Was that all the market needed? Is it ready to keep the momentum going from here? Or is this just a dead cat bounce that's going to continue the market lower? Seeing how it handles yesterday's high will tell the story. Obviously, if we pull back down and we get below yesterday's low, we'll call that just, 64.50, somewhere in there. Or 64,500. We'll call it somewhere in there. If it gets back down below there, very bearish for a larger pullback. So these buyers, if they want to hold this bounce, they got to hold it today. They got to keep buying the corn. Which they may just do if we get a gap and go on the ES and NQ. GD Solo says, what is your market profile software? It's called Window Trader. Window spelled without a W at the end. Unlike Bookmap, Bookmap is a completely unique set of software where you literally can't get the heat map from anything else. So if you want to use Orderflow, you really should be using Bookmap. With Market Profile, I just say any TPO charts you can get are fine. The software that I use is the most expensive. It has the most, controls. It is the most fancy. And that's great, but it's not necessary. Any TPO chart that you can get with your broker is totally fine. For those that don't understand what I'm talking about, these profiles that you see here, These are just another way to organize the information that you would see on a candlestick. So each one of these little letters represents a 30-minute time period, like a 30-minute candlestick. And they're compressed on top of each other so that we can easily see exact levels where the market has spent the most time. Because part of the auction process is time. If you think about a one-way auction, like an art auction, right? At the beginning, the auctioneer is going really fast. I have 900. Do I have 1,000? Do I have 1,000? I have 1,100. Do I have 1,100? Do I have 1,200? 1,200? Do I have 1,300? 400? But then as he goes higher, fewer and fewer hands go up in the air. Fewer and fewer people are willing to bid. And so he has to slow down the bidding. I have 1,600. Do I have 17? 17. I have 1,700. 18. 18 from anyone. 1,800 over here. Do I have 19? Do I hear 19? 19, sir? 19? Right? He has to really slow down that auction process at the end to convince more people to do business. So understanding the areas where the market spends the most time, the areas where it slows down and it just goes sideways in a very tight range, helps us to understand where business runs out. Because the stock market is exactly the same as an art auction. It's just a two-way auction. They auction it up, then they auction it down, then they auction it up, then they auction it down. That's all the market is doing all day, every day, looking for buyers, looking for sellers. So we use the TPOs to tell us how much time we spend in different areas because we know that's where the auction had to slow down in the past. We also use volume, the number of hands going up in the air. When that auction first starts, do I have 1,100? Do I have 1,200? There's tons of hands going up in the air. But then as that auction goes higher and higher and higher, it's fewer and fewer hands willing to go up in the air, right? So if you look at the outer edges of the volume profile ranges, you will see there's always way less volume at the highs and the lows. See that? Way less volume than in the middle of the ranges where there's lots of volume. So again, understanding where those levels are vertically on the chart helps us to know what will be support or resistance. Where will the market change its mind? Where will all the people that were buying yesterday get squeezed out of their long trades? Where will all the people that were buying in the overnight get squeezed? Right? So that's what the market profile is for. What the book map is for is seeing the liquidity in the market. So seeing the orders that didn't even fill, right? So far this morning, we have two large pools of liquidity below price. We have one right here at, between 52.17 and 52.20. We have another one down here at 52.07, right? So we can see currently in the order book right now that liquidity is sitting there. Those are orders, long orders waiting to get filled. But then we can watch what happens when the market comes down to fill them, right? Does it disappear? Does it get filled? What happens with that liquidity? By being able to see on the heat map how that changes throughout the day, we can understand who the market participants are and what kind of games they're playing. So the combination of those two things, being able to see who the participants are, what kind of games they're playing, and seeing the areas where the market likes to do business, gives us an edge for entering trades. Chintan says, yes, 0 days. Yeah, that's all right. I'm all right with you selling out of the money calls on the 0 days. They will likely try to fill the gap. They will try to get to Friday's high. Will they get there? I don't know. But that is likely the market will at least attempt it. Dylan says, when the ES opens on a move up with an overnight gap, but the SPX is still lower, doesn't that mean the underlying stocks are still lower? Okay, so it's kind of a complicated thing. Yes and no. At this moment, the stocks haven't moved because the market's been closed all weekend. The SPX hasn't moved because the market's been closed all weekend. But the second that the market opens, they will adjust, right? The arbitrage bots will instantly, poof, pop them higher. So looking at the SPX, right now, it looks like it's below that channel, right? It looks like we broke lower and it seems like it's bearish. But the minute the opening bell rings, it'll be like up here. And so in that very moment, it will have become a look below and fail, and then it'll be bullish. Okay, so you just got to wait for the opening bell to ring, and then you'll see that change. Same with all the stocks that are in the S&P 500. So each individual stock that's in the S&P 500 or the NASDAQ or whatever has arbitrage bots. You know, your BlackRocks of the world, right? There are companies that this is their whole business model. They just arbitrage the difference between the underlying assets and the indexes. So if the overnight traders push the ES higher over the weekend, the second that opening bell rings, all 500 of the companies in the S&P 500 will pop higher because those arbitrage bots will be making up the difference. He says, why wouldn't the futures always fall in line with the underlying assets? Well, they're constantly being connected to each other. So sometimes more liquidity enters the futures market or the options market with the SPX, and that starts to push the index up, and then all the underlying stocks get bought up as an arbitrage, right? Sometimes people go in and sell the underlying stocks, right? Somebody dumps a huge position in Apple or whatever, right? And then the arbitrage bots have to sell the indexes to bring them in line. So it's a tug of war between the two that is happening every minute of every day. That's what makes the ES a little bit easier to read, because an individual company, anything could happen, right? A piece of news could come out tomorrow and the stock price could completely change. The behaviors could completely change for that stock for years to come, for all you know. But the index, it moves in a certain way because there's so many arbitrages connected to so many different things. Chintan says, basically my question is, how would you know today being a gap and go versus a gap and crap? So it'll be support. So as I said, there's 3 different levels to watch for support. The first one is going to be this one here around 52.12. So if the market opens and it pushes down there and it finds support and it turns around and it gets back above the overnight high, it is a gap and go. You do not want to be a seller, all right? Because the market is likely to continue higher. The other one is yesterday's high. If the market comes down to 5,200, finds support there, turns around and starts heading higher, you do not want to be a seller. That is a gap and go. And then the third one is if the market instantly pushes higher, it never fills the gap at all. It comes back down and then it turns the overnight high into support. Well, then that too is a gap and go, bullish to see. So essentially, we're assuming the market is going to fill the gap, right? Anytime we have a gap, we should think it's going to at least try to fill the gap. But if we see information from the market being support, being buyers defending a certain level, we must change our mind and say, nope, they're not filling the gap. It's a gap and go. So it's always this idea of when what should happens doesn't. If they should fill the gap and they can't, or they fill the gap and instantly run out of momentum down, that's the opposite happening, which is buyers stepping in. So here we go. The market is open. We are opening right at the overnight high. So the first thing we're going to get here is a test of that overnight high. Chintan says, and ideally in the first 30 minutes. Yeah, I don't trade 0-day options, so I can't give you any advice on how to do that. I purely trade the futures because I don't like that. I don't like the way time, the theta affects the price of options. I just want to get long or get short when I know what's happening. And if I know in the first 2 minutes of the day, then great. I'll get long or short in the first 2 minutes of the day. If I have to wait an hour and a half, I'll wait an hour and a half. I don't want to be forced to have to make a decision before I have enough information. That's just the way I trade. Okay, so we are above the overnight high. What do we say? Question number 1, can they turn that into support? Can they turn 27 into support now? If not, if they pass back through the opening price, that increases the odds they will try to fill the gap. So it is essentially bullish as long as we stay above the opening price. Let's see what happens. Okay, so what is Bookmap telling us is happening right now? Short covering. All those sellers from Friday woke up this morning and went, oh, snap. And as soon as that opening bell rings, they are covering their shorts. That is creating this momentum up. That is not bullish to see yet. They still need to pull down and turn the overnight high into support for it to truly be bullish. Because again, we talked about the auction process. We talked about running out of buyers. If the only people buying up here at the highs are people covering their shorts from Friday, well, they're going to run out. Eventually, everyone's going to cover. So we need the market to pull back down and give new buyers a chance to FOMO in at the overnight high. Then it will truly be bullish. So we're waiting to see if they can hold support. And this was what we talked about with the SPX here. Somebody had asked the question. There you go, right? The moment the market opens, the SPX adjusts to the overnight inventory. So will every single stock in the market, in the index. Okay, more short covering. Anytime you see one of these green dots, the way I have my settings set up, it's a large imbalance of buyers and sellers, or the dots won't even show up. So when you see this many green dots on top of each other like this, that is sellers getting squeezed. Those are stops getting taken out. Gotcha. Ship says, does Thinkorswim have a TPO chart? No, it does not. It has something called monkey bars, which is kind of similar. It shows you a lot of the market profile levels, like the value area high, value area low, point of control, stuff like that. But it doesn't specifically have TPOs. Tom says, where does the data for tech information come from? What platform? Oh, tick information. So the tick chart, if you're talking about the market internals, that is just available from the NYSE and the NASDAQ. So any broker should be able to give you access to the tick. I know some charge extra for it, but it is literally just the ticker symbol TICK, or if you want the NQ, TICK/Q. Okay, so moment of truth. Now we are pulling back down to that overnight high. We squeezed all the sellers from Friday. Now we got to find out, are there new FOMO buyers this morning? Do they want to hold this overnight high as support? If they can hold it, it is bullish for continuation higher. If they pass back through the opening price, we are likely to get a little bit of a pullback trying to fill the gap. Can they hold it? Jay says Fed week should be interesting. Is it, or are they just going to say things we already know? Is it just going to be Fed speak? Good morning to Vu. Dylan says gap behavior always seems weird to me. So just put it in context. Tell yourself the story of what's happening, right? If there is a gap up, then you have sellers from the previous day that have to cover, right? That's buyers that are going to push the market up higher. What happens when they run out? Do new buyers step in, right? You also have sellers that will step in to fill the gap. What happens if they can't fill the gap? What happens if the market pushes back through the opening price, starts to head lower? So you got all these people selling and selling and selling, looking to fill the gap, but then it finds support and it comes back up through. Well, then they're going to get squeezed. So just keep in mind who is doing business where and who is more likely to get squeezed. That will help you monitor what's happening within the gap. It is also worth mentioning large gaps often don't fill the first day. So that is another edge to take into consideration. Small gaps almost always fill. Large ones, usually it takes a few days for the market to come back. I find a lot of traders, the reason they struggle is because they don't understand the mechanisms that are at play. They don't understand who's doing business or why. So to them, it just all seems random. Sometimes you get a gap up and it goes up all day. Sometimes you get a gap up and it goes sideways. Sometimes you get a gap up and it goes down. And so you're like, what is going on here? Well, just watch minute by minute. Where's the support? Where's the resistance? Where will traders get squeezed? So that was your first test of the overnight high. They got a bounce. Can they hold it? Novice Trader says, why do you say short covering happens at the market open? Don't they do it overnight? In the ES, yes, there will be some of that. Some of the short covering will be overnight. But for the underlying shares, no. Right? So these stops that we're seeing right here in the order book from the ES, these are just overnight buyers. I'm sorry, overnight sellers, right? The people that were shorting up here, they were hoping the market was going to open and immediately try to fill the gap. You see all this volume. Where was most of the volume in the overnight? Right up here at the high, right? So there was a lot of people shorting up here, hoping that the market would open and the gap would immediately fill. So that's them getting squeezed in here. But the underlying shares, you can't trade them when the market isn't open. So that short covering has to happen once the opening bell rings. That's the thing about gaps. Gaps are unique because every trader on earth sees them and every trader on earth knows what they mean. So everyone's got to make a bet. Everyone's got to be in a trade just because they see a gap. And so one side or another is always fixing to get squeezed. And a half gap fill is when basically both sides get squeezed. Michael says, what are my dot settings? It's a fair question. Clustering by 50 contracts and minimal display 300. So it just won't even show me volume dots unless there's more than 300 contracts at a particular level. And of course, the color tells you whether it's more buyers or sellers, and the size, the indifference, right? So a little tiny volume dot is just a little bit more buyers than sellers if it's green, or a little bit more sellers than buyers if it's red. A very large dot is a sign of a lot more buyers than sellers, which is a stop's getting taken out. Okay, so for what it's worth, it does feel to me like this support is going to break and the market is going to pull back through the opening price. However, if they come back down and test the overnight high again, we'll say 52.27, and it holds, I will get bullish very quickly. But to me, this feels like it's more short covering and less new buying. Increasing the odds that they will at least try to fill the gap. David V says, do I interpret the current absence of a gap fill as bullish, or is it too early to say? It is too early to say. So to trust that the overnight high is going to hold, I got to see it really hold, which it looks like it's going to happen as we speak. And of course, the second they pass through that opening price, everything changes. right? All the buyers from above the overnight get squeezed, and a bunch of new sellers looking for a gap fill join the party. So we are dancing on a razor's edge here at the overnight high. Can they hold it? So that's this moment here. Do the buyers step in? Do we bounce? Or do we pass back through the opening price? Bounce is bullish. Pass back through the opening is bearish to at least try to fill the gap. Dun dun. Dun dun. RP says, I struggle with days like this if it doesn't pull back to an area I believe it should and it just runs. I FOMO, buy in, and then, of course, it finally pulls back. Yes, sir. That is called chasing a trade. I have a rule. I never chase trades, period. So I either get my entry on the pullback at the support level I want to get in, or I just let the trade go. Because you are absolutely right that if you chase trades, it may work out now and again, but it won't work out statistically over a number of trades. You need to buy fear and sell greed. And so if you're buying greed, right? If you're buying that feeling like I'm missing it, that won't work out for you most of the time. Buying fear, watching the market pull back into a support and bounce and being like, is it going to hold? Is it not? That is a good place to enter a long trade, not chasing the price up. Pavel says NQ is not, or NQ is more bullish. Let's take a look at the Q. Yes, sir. It's the same exact narrative, though. They got to hold support above 18,296 in order to keep the momentum going. But their low is not quite as weak as the ES, so they may not need to backtest it again. Let's see what happens with the ES here. They'll probably both move in sync. Meaning that if the ES starts to fill its gap, the Q will as well. Boy, they're just dancing on that opening price because they know the second they break through, it's liquidation time. And there it is. All right, so that increases the odds that the market is going to try to fill the gap. Remember, large gaps often don't fill the first day. So we may push into this support somewhere between 16 and 11 and bounce there. But they will probably at least try to fill that gap. If there's no support in here, you're looking to head to 52.02. But shenanigans, chop bot shenanigans. Sienna says, your website membership, how often do you have live streams or chats? Every day, 9:30 a.m. to 10:30 a.m. every single day. Okay, so you're probably asking yourself, why didn't we liquidate, Charles? We passed through the opening price. Well, we've got bots. These are those day trading bots that always buy the VWAP. They're creating a little bot shenanigans here. The higher probability is still an attempt to fill the gap, as these are not real new buyers, right? These computers will change their mind quickly if they don't get any move higher. So patience, my young Padawan. Liquidation is coming. There we go. Okay, so now you have to start thinking about who are the participants and what's happening. So anyone that was buying in this node up here in the overnight, looking for the momentum to continue, they're starting to change their mind now, right? Anybody that was buying up in here earlier this morning, they're starting to change their mind now. Okay? Plus, new sellers who are looking for the market to fill the gap are starting to look to get short here. So they had a chance to hold the support up there and keep the momentum going. They have failed to do that. So that increases the odds that they will at least try to fill the gap. as we just changed a lot of people's minds by passing back through that opening price. Rito says, icebergs don't tell me anything. Seems random. Icebergs getting crushed often. What's your view? Yes, sir. So the way to view icebergs is basically as being computers, right? So I don't use them as like a support or resistance level. Like if I see a green iceberg, I assume the market is going to go up, or I see a red iceberg, I assume the market is going to go down. That's not how I use them. I use them to understand what's happening. We just had an example of that a few minutes ago. The market passed back through the opening price and then it instantly bounced, which makes no logical sense, right? Because once you pass through that opening price, as we discussed, that's where all the buyers start to get squeezed. There should have been a bunch of stops right there. But what stopped the market from going lower was a iceberg. So there was a computer that was trying artificially to hold up the price at the opening price. So if I'm a bear, I'm just thinking I'm going to ignore it because it's not real buyers. It's just a short-term computer trying to make a trade right now at this second. That computer can change its mind instantly and then we'll crash back through, which is what happened. If I was a buyer, I'd be nervous at that moment because I go, wait a second, this isn't real support. That's just a bot. Right. So I use it really as a way to just understand, is this a real buyer, somebody with size who has decided they want to get long or short, which sometimes is an iceberg, or is this just a computer doing a quick little day trade? And you can tell if it's icebergs on both sides of the market again and again and again. So if you have a green iceberg and a red iceberg and a red iceberg and a green iceberg and a green iceberg and a red, if you just keep getting that again and again, that's just those bots. And that's what we call bot shenanigans. Green, red, green, red, green. We haven't had our red yet. But that's just some computer that trades in a fraction of a second, just doing what it does. Don't ask me what it does. I have no idea. Tom Gunn says we need a good pirate crypto coin. There's thousands of them. Pick your favorite. They're all going up by 50% in a single day at some point. I'm just kidding. Don't trade shit coins. It's not worth it. It's not emotionally worth it. RP says, when it approaches your support or resistance areas, would you be looking to make a decision on an entry? Well, first I'd be taking profits, right? If I'm looking for a gap fill trade, I would be short, and a support level first would be a level to get out of my short. And then if I'm watching it and it's bouncing and it's bouncing and it's bouncing, then yes, getting into a long. But the first order of business in a gap trade is to fill the gap. So until I'm given information otherwise, meaning I see the support that stops that gap from filling, there's no reason to be long. If we'd have gotten support at the overnight high, I could have gotten long up there, right? If we get support at 52.11, I can get long there. If we fill the gap and we get support at yesterday's high, I can get long there. But until then, there's no reason to be long until the market confirms that we have new buyers and that it's ready to flip in reverse. Shanina says, just joined the brigade. Welcome. Happy to have you. Speaking of which, it is that time, folks. Unfortunately, I must say goodbye. You guys know I hate having to switch from one stream to another at such a pivotal place as this. Still haven't filled the gap. We got a poor low, which is a magnet pulling on price. The higher probability is that the market will continue lower. However, if they do get back above the half back now, so 52.28, and turn it into support. The and turn it into support is very important. Then I will change my mind and no longer be bearish. But as long as we're below that half back, I am assuming we are trying to fill the gap this morning. The bots are just continuing the shenanigans. They're getting as many traders long and as many traders short as they can before they finally make the move. With that, I will say goodbye, farewell, au revoir. Wish you all the best. If you have not hit that thumbs up button, now is the time. Give me that like. If not, we will see you next week. Members of the brigade, let's set sail. See you guys in the private stream. Bye.